So very
Hey guys, welcome to Trading the Markets. Quick
Hey
last
guys.
edition. Just want to go over some trades and some game plans and what's been going on in the market. I don't know if you guys are connected. What's up, April, Edie? Thanks for tapping in. I don't know if you guys are busy, but
Hey guys.
hey,
Miss you.
April.
Hey, I miss trading and studying with you guys.
That's what's up. Let's get back into it.
sure. I'm
Definitely.
I'm just getting back into it myself. I'm not even gonna
Yeah.
lie. A very long break, you guys.
Yeah, I'm lost. Like when I look on what is it?
Chart.
Not it's no longer TD Ameritrade, but now I'm like, okay,
Schwab.
yes, I'm confused when I look at it now.
It was already confusing to begin with.
mm,
Hey, Edie
Yeah.
made $200 in gold this week. That's what's up. That's what's up. All right. Made $200 today off Ford, but I'm gonna go over my loser and I'm gonna go over my winner. So this is how I journal. My journaling has taken so many different evolutions, but I feel like journaling is the key because you have to study what you do to really get better, and you have to do what most people are not willing to do to have what most people will never have. So you have to put in the time to study to become, surgical with your craft. So I'm gonna go over this loss I made on Guild. Let me write down the name of it, Guild, right? So this is a healthcare stock that to me, like, so when it comes to the stock market, I always want to know who's the leaders and who's the laggers, like who's the outperforming the sector or outperforming the market and who's underperforming the market. Because based on who's leading or lagging, it will help me time the market better, so. This was Gil. This was a trade I made on Tuesday. So I bought the 91 call. I got in at 10.13, got out 11.57. I bought two contracts at $2.33, which comes out to $233 because both of them cost $466. I put my stop loss at 204. I got out at 203. I lost 60 bucks. I lost 13%. Mind you, I put up 466 and I got 406 back. That is how you tighten up your risk, especially when you're taking riskier entries. So right here, you see the contracts I bought, 91 call. You see the average price was 233, and you see that at this point I was down 8%. But because I put up more money, I'm down more. So I jumped into Guild once I seen a break of a certain level, but I knew it was a risky because I didn't wait for the pullback. That's where I messed up. So right here, you see like this, like what I seen in breaking this level, but I entered right here on the last green bar. So I entered at the top, right? But then I said my stop loss needs to be basically where that line is. So that's basically where I put my stop loss, give or take a few cents. And because options, as time goes by, your stop loss actually moves up because your contracts are losing value as time goes by. So as you can see, I got in at 90. So right here, I got in. I even write my stock entry. This is how detailed I want to be, so I can know exactly what I'm doing exactly when I do it. So when I entered at 10.13, the stock price was 90.64. When I got out, it was 90.08. So you see right here is 90.64. 15-minute chart. You see it was consolidating, and then eventually I got out. I got stopped out. It's interesting. Like the first time you say I don't get stopped out because the contracts were more fresh, but as time goes on, the volatility kicks in. So I got out, and mind you, like now if you go on the hourly view, you see why I thought it was gonna keep going up because I seen this double tweezer bottom. After a big push up, I'm like, as long as it stays above these lower wicks on these lows, there's no reason why I shouldn't go up. But guess what? It never made a new high. It never made a new high. Especially right here, I thought, see, it's like it looked like it might break out, but in order to protect my risk, I placed my stop loss underneath the lows of the wicks. Lo and behold, it went underneath, and I'm so glad I got out. And as you can see, at one point it came to my stop loss, and I seen it starting to bounce up. But at the end of the day, it ended up just going lower and lower. Like as you can see right here, it went lower and lower. You know. So I take these screenshots on my phone when I enter because I know that they're going to be useful later from when I journal it so I can look back and be like, okay, why did I enter? Oh, how did it look? Did it look good? And then I can look forward to these traps later on in the future. But really and truly, I should have been more patient. I should have. So basically, like where my stop loss was at, that's where my entry should have been. Does that make sense?
Mm-hmm.
So you got to learn from your losses because these are where I become better at entry. I'm like, I'm not gonna do that again. I see exactly where I fucked up. I'm not gonna fuck up like that again because it was just me not being patient. This was FOMO. Oh, it's going up. Oh, let me hurry up and get in there. Nope. You did not wait for a pullback. You did not follow your normal routine when it comes to entering in the trade because you always want to enter where it's safe, where you don't have to put a lot of risk. Because me entering right here, I had to put my stop loss all the way down here. You know what I mean? But it's like I wish I could put it all the way down here at like 89.40 where I would never get stopped out. But too much risk. So that's the loser. Now let's go over the winner. So this was a trade I took today. $11 call on Ford. These are the times I got in, times I got out. I scaled out. I realized as I was scaling out, I could have just sold everything the first time. So I ended up taking a little bit less than where I was at, but I still made sure I took a good amount and I didn't leave with nothing. So here's this trade on the 5-minute. So this was a much better trade because I was actually watching this on the 2-minute chart and the 1-minute chart because if I go to Ford real quick, and like Ford is a stock that I had a plan on like 45 days ago, and I made money on it a couple of times. So I've been rinse, washing, and repeating my old plan. So this is my plan. So if I go on the daily, you can see I had this planned out like such a long time ago, and I reused the same plan. So I had originally first got into this all the way back. I want right here this day, and this was like, let me see, what was that date? Because I like to really be on point with me really caring about every little detail of what I'm doing. So you don't have to go this hard, but why not if you're really that serious, right? If you want to become the best, you got to study film. So I got in right here, yeah, on this day, so Friday, October 4th. And I was getting, so what I did was I bought time. I bought a month out. So options, the more time you put on it, the more it can go against you and your money goes down a little, and that allows you to stay in the trade. Of course, if it goes up, it'll go up a little versus if you put less time, it'll go up more. But you want what I learned, especially us who have been trading for a while, we know the direction. We just need to get the timing right. So why not put more time so that you can stay in the trade for longer? That was the main thing because if I got in this day and I bought a weekly, this wick would have already put me out, you know? But I was able to take it down even lower because I had my plan and I had my targets. And mind you, all this didn't happen yet. So it was looking more like this, So I looked at all these highs, first high, first target, next high, next target, and then so you see how I had my targets, right? So basically I was following my plan. Yep, timing. Timing is the hardest thing in the market. So the new mentors that I have now, all they focus on is timing. Timing is everything. So once I got in this day, it looked good, right? Didn't this kind of look good? But that doesn't mean it can't go against you before it goes up. So I needed to know where to cut my risk. I know under this wick, I do not want to be interested in this trade no more because under this wick, it could fall a lot more. It could fall a lot more. So I have my line in the sand. That's the first thing. Because what you want to do, you want to enter close to a stop loss level so that when it goes down there, you're not losing too much money. So on this day, I put up $900, and if it came down under here, I would lose 200. You see what I'm saying? So I'd rather put up 900 on one best trade. If I'm right, I'm right. If I'm wrong, I lose 200. I'll get 700 back, and I can basically look at my entry and just restudy it and make it better. So that was the line in the sand. And then I was getting nervous, especially this day. But boom, after that, it was good. So as I hit first target, I skilled out 1/3, hit second target, skilled out another third, and then I think I sold it and I got back in, and then eventually hit the third target. But look what happened. Look at this dump. Imagine if I didn't take profit. I would have been sick. You see that? So every time you're swinging, you want to take profit when you get it. You want to take profit. You want to have levels that you're taking profit. Taking profit is the most important thing. If you don't take profit, you might get dumped on. I could have got dumped on. And in the past, I have gotten dumped on. But I knew I had clear targets. So if I'm hitting them, why am I not taking it? Clear targets, take it. You know? And mind you, this third target got hit. And I've been got out from the second target. So this day I sold everything. And then I got back in later on. And then I ended up selling it again. You know, so now we gapped down. So then on this day, I tried to get in and I got crushed because it wasn't ready. So I was like, all right, stop loss, get out. Let's wait for more confirmation. So this was the low, and I noticed this low did not get broken, you know, because this is a very long wick, and that's a big liquidity attraction. So it came down this far, and then once it broke above here, what did I do? I got in. I got in. What day was this? Tuesday. And then, oh yeah, and then Trump won, and I knew Trump was gonna win, so I made like $300 just from here to here. You know, I caught this gap up, which is phenomenal because I'm like, damn, that was nice. So I got in, and then now I remember I was like, okay, do I hold this or do I take profit? I'm like, what am I doing? It hit my second target from earlier. Why am I not taking profit? And that's why I'm glad I was able to reuse the plan, leave the same targets as where they were before, and take profit at the same places again. Especially since like on this day, I noticed like I have so on Robinhood, you could have a watch list that will tell you the price of the contract, and I noticed how much they drop. So once I seen like, for example, like this day I took profit yesterday, and I seen what I took profit on dump this much, that was my incentive to look for a dip today, and especially if it stayed up above this level to look to buy, you know? So I remember like I was probably on like the 2 minute chart, and then once I started to see that this was so reversal structure. You see how like this is basically reversal structure. Once you start to see this type of shape, that's a reversal. You want to get in right there. You know what I mean? Especially if you know it's on an uptrend and you know it dumped hard. So you know it has to try to come back up to make up some of that. So it was a those are the trades where I could have put up any amount of money on because I'm that confident, but I used what I had at the moment. Um, and that's why it's important to not get your money tied up into B setups, C setups that aren't really that great of a trade for you. You know what I mean? That's why it's really important not to get caught up in those type of setups. So, oh, what did I do? Did I just there we go. All right, so yeah, so if I go back to the journal, right? And like I said, like it's all about knowing what you do, especially if you're trying to become a better executor, you got to know what have you been doing. Like just like in any sport, you gotta study film. So like right here, once I seen that it gapped down on Ford, and I knew the level that I would want to buy off. Once it came close to that, and it started to curl up, that's where I got in. I got in, and I bought. So first I bought 10 contracts, then I bought another five, then I bought another five. And lo and behold, my target was up here. But look, it didn't reach it. But once I started seeing that it's consolidating and it's not making new high, what did I do? I sold. I sold because I seen that the momentum was starting to die down, especially all this big momentum, like you see on the 15 minute, like it was quick, and I got in at the right time, and I was able to look, like at one point it was looking like this, like it was about to hit the second target, and never did, as you can see. So that's very important to take profit, you know. But this gap and this candle was the confirmation when I got in, got out the next day when Trump won, and I took profit that day, even though I had time on my contracts. I had December 6 contracts, but as you can see, this time I got in with the 29th contracts, the 11/29. So it was really just timing it. Like everything was all about timing. Because as I was watching, I was like, don't get in yet, don't get in yet. Wait until it comes close to this line. And it came close and then it started reversing. And that was enough. That was enough for me to get in. You know why? Because if I was wrong, I was only gonna risk Let me annotate. If I was wrong, I was only gonna lose this much. You know what I mean? Only gonna lose this much. And I knew how much money I had because if you look at my stop loss, which is it here? Or maybe I didn't screenshot it, but my stop loss was at 2021. So you see I have contracts, I bought 10 contracts at 27. Oh, hold on, go back, go down. Yeah, so I bought 20 contracts at 27. So I put my stop loss at 21. So if you do the math, right? 7 minus 21 is 6. 6 times 20, that's 120. So I put up 540 and I was risking 120. You see what I'm saying? So the main thing is controlling your risk and making sure you're getting in. Because to me, the way I like to trade is I like to find my best, most confident trade and drop a bag and see what happens. And then that if I lose, that's it. That's my trade for the day. You know, if I win, it should probably still be my trade for the day, but I might take another trade. You know what I mean? But the main thing is less trades equals more money if you're studying your entry and you're becoming more and more surgical and you're really on top of it. Because like I said, this took me doing this takes hours, believe me or not, believe it or not. But like I said, you gotta be willing to do what other people are not willing to do to have what other people are not ever gonna have. So any questions on that before I just go into the market? No? All right, cool. All right, so now let's go into the state of the market now. Let's see what can we do now with the information available. All right, what's going on, Trubs? Let's see. One day. So, all right, so what do I want to do now? I want to see if I can get in again. Why can't I rinse, wash, and repeat another 3 times in a row? Why can't I do that, right? So now so now it's all about the level. So now I want to see, do we come back to this level? Do we break this level? And if we break this level, the next level is down here. And if we can bounce off of this level or that level, I see a really good chance of making profit because I'm going to put time on my contracts. Mind you, I'm putting time on my contracts. I'm making 30%. If I had put less on my time on contract, I could have probably made 100%. But it's not even about that. It's about me being able to stay in the contract when it goes against me. How long can I stay in while it's going against me so that I can actually get out at a key level? So your stop loss should be based off of like the lows and the structure. That's where you should be getting out. Because like for example, if it broke under here and it started to eat up this gap right here, I have no business staying in. So right now I'm really looking to see if something like this could happen, maybe. Maybe it'll come back double bottom, or maybe it'll come underneath and maybe do something like this. If we could do something like this, that'd be nice. If we could double bottom, that'd be nice. But I'm really looking for a bounce because I know that this level right here is still an attraction. Even this level right here as well. So I know that these are attractions, but at the same time, this gap is also attraction. So I got to see which way it's going to go. And I'm not going to get in until I see some structure, like I was just explaining, like that reversal structure. Because even this, like, look, let me go another 5 minute. I didn't get in until we started to make that cup, like once we started to actually break. So like it was coming down, but once you start to cup up, I seen the wicks and I see we start to break this high. We start to break this high, especially this high. I should have got in because I want to get, if I get in right here, I know that my risk is this small. If I get in right here, now my risk is a little bit bigger. If I get in right here, my risk gets a lot bigger. So I want to get in close to this risk as possible.
Yeah,
So
did market ever fill that gap right there?
this gap right here?
Yeah.
Not yet.
Not yet. Okay.
Yeah, earlier, like in a way you could say it did earlier, but it re-gapped. Like look. Like you see how it filled it, but then it didn't fill this gap. If you see what I'm saying?
Yeah.
Yeah. So that's why I'm like, I'm still like, I wanna see if I can get back in here and maybe get a little bit of time and see if we can get back up to the highs. So clear targets, but at the same time, it could fall, and I gotta be ready for that. Yeah. What do you think, Sid?
As of right now, there's the daily chart. No, this one out.
4 hour.
Um, I do think it's gonna test the gap before it shoots up.
So this gap down here,
Some like yeah, at least
some of
50%,
it.
at least 50%. Because there's no way it's gonna wake out like that and then just like yeah,
Shoot up.
that it's there's no way it's gonna wake out like that and not claim liquidity from that side because that
Because it
wick
technically
alone,
didn't go lower than this low.
yeah, like I think it's gonna test somewhere down there because it gotta stomp some people out because a lot of people's bias is bullish right now.
Yep. That's true. So maybe if we can break into this and bounce in here, that might give me the entry I really need. But
Right,
I'm gonna
right,
be patient. I'm gonna be patient. I'm not gonna jump the gun because at the end of the day, I want the safest, best entry because I want to drop some bread and be comfortable.
right.
Yeah. So that's how that is. But even the trade that I lost, like this is the trade that I lost. This guild trade. Let's see.
Just-
Is it still on here? This was trying to see on the 4th.
Yo, that bullish move look crazy though.
Yeah, that was today. Yeah, today it went crazy. But that's
That
what I'm saying.
today?
I got in this day and I lost. This is the one that I showed you on the journal.
Mm-hmm.
Like, let me go back to the journal. I lost this trade. I kept the risk really tight and I lost this trade
It
right
stomped you
here.
out then went in your
Yeah,
direction?
right here. It stomped me out, and then later on, it kept going lower. As you can see, it went all the way down to 89. It kept going lower, but eventually it went in my
Hold on,
direction. Imagine
where'd you put your stop loss at?
right there. So you see right here?
Yeah.
Yeah, so I got stomped out. And like this is it on the hourly, you know. So if I go on the actual chart, that's what
Yeah.
90 bucks. So you can see right here, 90 bucks is okay. I already have it right here. Okay, it's right here. So let me see. Can I go on the hourly and see this?
But
Yeah,
you
right
got
here. So you can see it. You see I got stomped out, and after that, but it kept going lower. So my timing was off.
hold
My
on. But what time frame did you try entering on?
I try to enter on a 15 minute, 15 or
Okay,
5 minute actually, 5 minute,
why?
15 and 5.
I
But
get
yeah, but I entered after I seen, like it start to go up. Like let me go on the 15 minutes. See, there you go.
so did you think that was gonna be a pullback to keep going up?
Um, I just yeah, but I stopped looking at it after I got stomped out. I was like, I'm done for the day. I'm like, I'm done. I'm done. But yeah, I could have re-entered and made a phenomenal comeback.
Oh my goodness, for those.
Yeah, phenomenal comeback. But this is why this is a lesson for me. If I had been patient in the beginning, I could have gotten a decent entry that maybe I could have stayed in this trade, you know?
Mm-hmm.
Because this is what the move originated at. So what I should have done, right, is let me make a box. Made a line around the origin of the move and try to enter over there. That would have been a much safer, smarter entry. Why? Because now you got to think if it goes against you, once it starts breaking under here, this low could have been my stop loss, or even any lows underneath here on let me go on the hour. So on the hour, you can see like could have been stop loss levels where I could have afforded for it to go against me if I got in right there. You see what I'm saying?
Yeah.
But I didn't wait for the pullback. So I messed up the entry. And even though it did go my way, I can't risk it not going my way. So I have to get out, you know?
Well, so when you was taking that trade, did you think it was gonna do like a one candle pullback and keep going, or?
Honestly, I thought that maybe it would pull back but stay above this level. You know what I mean?
Mm-hmm.
And then keep going, especially after this big candle with a lot of strength.
Yeah.
And that's something I got to be careful about because I like to enter after strength, but I should enter after strength, but then after the pullback after strength. Make
Yeah.
sense?
No,
So after strength, wait for the pullback and then enter. Because I ended up buying at the top and I got punished. And even though, like I said, if I stayed in it, it would have worked out wonderfully. But no, I have to become a surgeon and work better at entry so that when I enter, I don't have to worry and I can stay in the trade for longer. For example, if I had put more time on this trade, let's say instead of doing the December expiration, if I did January, February, it probably would give me enough cushion to stay in this trade because it softens the blow. So that's what I'm saying. But so as far as sectors and stuff that's going on, so yeah, yeah, I know we got like 7 minutes. If you guys want, we could log back right back in.
I'm down.
All right, I'm about to log out and log back in because we got like 7 minutes, and I kind of want to get into what's going on right now and what plays I'm looking at tomorrow or next week. All right, y'all. So I'm gonna log out and log back in. April,
Okay.
Edie, and Trubs.
Okay.
All
Yeah.
right, all right, let's do it.